On Business Incorporated today, Egypt's inflation accelerates to 21.3% in December 2022. Zimbabwe dollar plunges to a new record low. And Ethiopian Airline resumes daily flights to China. Good afternoon. Welcome to the Tuesday edition of Business Incorporated here on Channels Television. I'm John Mekwa. As usual, we delve into the market now and see how those equities are doing. As intraday in Africa, we see that it's mostly negative. Looking at the numbers there, Nigeria are losing almost the same percentage it's closed with yesterday, down 0.91% as intraday, while GSU of South Africa is also in the red, 0.70%. Looking at other parts of the region now, Egypt is even doing much worse. 2.66% at 15,669.09, while Kenya closed yesterday's market in the red, also 0.13%. We do look forward to a recovery of those markets. Moving on to the Middle East now, it's a similar sentiment that we see at the Middle East, starting there with Abu Dhabi. Abu Dhabi, however, is in the green, 0.23%, but Dubai, back to what we had in Africa, 0.31%. in the red, 3,311.72. I see other regions now. Saudi Arabia also in the red, 0.10%. That's minimal compared to what we've seen in other markets, while Qatar is also down 0.36%. Beyond the markets now, let's see what's happening in Europe. And what we see is that opening of borders in China is having a positive effect on European markets and others. Well, because of that reopening, we can talk about what's going on there. We have Rob Watts now joining us to give us a heads up of some details there, how German businesses are reacting to this, even though there's still that worry that things are not all set. Hi, Rob. Good afternoon. So we see the markets are reacting positively to the boost going on in China.
Yeah, so the pandemic may feel all but over, and the fallout from the war in Ukraine appears to be stabilizing to some extent. So you might expect there to be some optimism that 2023 will be better than 2022 here in Europe. However, research by the German Economic Institute suggests that that isn't necessarily the case. It says that 40% of businesses are expecting to shrink their operations during the course of the year. The Institute says that firms are feeling downbeat because of the continuing high cost of energy here in Europe, caused in large part by Russia's invasion of Ukraine. There are also continuing supply chain issues, which are a legacy of the pandemic, really, and China's prolonged COVID restrictions. Plus, the war in Ukraine itself is creating a climate of uncertainty. Then if you throw in the fact that the German economy, Europe's biggest, of course, is expected to shrink by the most of all of the G7 nations this year, and conditions just aren't great for companies all around. And of the remaining 60% who say that they don't expect their businesses to drop in 2023, the majority of them say they expect to stagnate.
Yeah, and we see that's also reflecting so much in businesses that are operating in Germany.
Yeah, so the pandemic may feel all but over, and the fallout from the war in Ukraine appears to be stabilizing to some extent. So you might expect there to be some optimism that 2023 will be better than 2022 here in Europe. However, research by the German Economic Institute suggests that that isn't necessarily the case. It says that 40% of businesses are expecting to shrink their operations during the course of the year. The Institute says that firms are feeling downbeat because of the continuing high cost of energy here in Europe, caused in large part by Russia's invasion of Ukraine. There are also continuing supply chain issues, which are a legacy of the pandemic, really, and China's prolonged COVID restrictions. Plus, the war in Ukraine itself is creating a climate of uncertainty. Then if you throw in the fact that the German economy, Europe's biggest, of course, is expected to shrink by the most of all of the G7 nations this year, and conditions just aren't great for companies all around. And of the remaining 60% who say that they don't expect their businesses to drop in 2023, the majority of them say they expect to stagnate.
Well, I hope this pessimism is not spreading over to the markets, Rob.
Well, they continue to enjoy their highest levels for 8 months. It's been an upbeat start to 2023, despite the doom and gloom being felt by some German businesses, as I've just mentioned. But there are hopes that the recession forecast for this year in the Eurozone in general will be somewhat shallower than previously thought, and that's helping markets to continue to rise here. The reopening of China has been reinforcing that as well, something that we've also mentioned time and time again when talking about the mood of markets in recent months is how expectations of the Federal Reserve's behavior are affecting investor confidence. Fed Chair Jerome Powell is due to speak later, so expect a calm day on European markets as they wait to hear what he has to say. We're also expecting to hear from some key figures at the European Central Bank as well, of course. So investors in the Eurozone are going to be looking for hints as to whether the rates rises in the region show any sign of coming to a premature end.
All right, Rob, thank you so much for that. Talking about Jerome Powell, we're going to hear a lot about him in the next few minutes. Thank you so much, Rob. We'll talk to you tomorrow. Now, let's move on to Asia, where markets traded mixed after the Nasdaq Composite extended gains for a second day on Wall Street. Technology stocks helped the index skirt losses on Monday. We see the Nikkei 225 in the green there, 0.28%, looking good at 26,175.56. The topics also in the green, not so good, 0.27%. And in Australia, in the red there, 0.28% at 7,131. Looking at Shanghai, also in the red, 0.21%, while the Shenzhen Composite is doing good at 0.5% for Asia markets. Now moving over to the United States, now we see that the stock features were a little changed on Tuesday as concern over high rates lingered among traders. Features tied to the Dow Jones Industrial Average shed. Our S&P also fell. That's it. Those are the numbers. The Dow Jones down 0.18%. S&P, these are features 0.2%, very marginal. We see the Nasdaq also is, however, on the flip side at 0.16%. Atlanta Federal Reserve President Raphael Bostic has said that interest rates should rise above 5% and stay there for a long time. Now, this comments came ahead of a speech by Federal Chair Jerome Powell, as we said, which is slated for 9 a.m. Eastern Time. Investors came into the new year worried that higher Fed rates could tip the economy into a recession. However, many appear to be mounting bets that inflation is starting to ease. In the oil market now, prices edged lower on Tuesday on expectations that further interest rate hikes in the United States, which is the world's biggest oil user, will slow economic growth and limit fuel demand. Brent crude futures for March delivery fell 43 cents to $79.22 a barrel. That's a 0.5% drop, while U.S. West Texas Intermediate crude fell 36 cents, which is 0.5% also to $74.27 a barrel. Both benchmarks climbed 1% yesterday after China, which is the world's biggest oil importer and second largest consumer, opened its borders over the weekend for the first time in 3 years. The United States Federal Reserve officials are expecting that the federal policy rate, now at 4.25%, will go to 4.5%, to need to rise to 5% or even to 5.25% to bring higher inflation rates under control. Metals now. Gold prices were steady on Tuesday with cautious traders largely focusing on that speech from Jerome Powell for insight into the U.S. Central Bank's rate hike trajectory. Spot gold held its ground at $1,872.79 per ounce, and gold futures, U.S. gold futures, were flat at $1,877.70. Investors focus on that speech we've been talking about at the Central Bank Conference later on today. Market participants will also scan the U.S. Consumer Price Index, that's the CPI, which is due on Thursday, for further clues on Fed's policy stance. Elevated interest rates dull gold's appeal as an inflation hedge and raise the opportunity cost of holding the non-yielding assets. Away from the markets now, Saudi Arabia and Angola have signed a memorandum of understanding to promote trade and investment. The Federation of Saudi Chambers and the Chamber of Commerce and Industry of Angola have signed this MOU to strengthen the economic relations between the Kingdom of Saudi Arabia and the Republic of Angola. The MOU areas of cooperation include enhancing communication between Saudi and Angolan business sectors, tackling trade challenges, exchanging information on markets and investment opportunities, as well as visits of trade delegations and holding events and exhibitions. Meanwhile, Botswana posted a budget surplus for the 6 months through September, driven by surging demand for diamonds as buyers flocked to the African nation and avoided Russia following its invasion of Ukraine. The Southern African nation recorded a budget surplus of 598.7 million pula. That's about $46.9 million of gross domestic product in the first half of the fiscal year ending March 2023. The positive balance was driven by a 66% increase in mineral revenues, largely due to improved diamond exports. Despite the improvement, the ministry's forecast for a budget deficit of 7.7 billion pula, which is about 3.4% of the GDP for the current fiscal year, remains unchanged. Finance Minister Peggy Serum may revise the estimate in her budget speech, which is due next month. Let's take a short break now. When we come back, we do have a whole lot of stories and conversation waiting for you on the other side, especially on Africa. Join us again. Welcome back to Business Incorporated here in Channels Television. Now let's go into the seafood industry with shrimps and prawns. Just two types of that seafood, and they're consumed worldwide. The global market for shrimp and prawns is valued at $55 billion, with the production of farmed shrimp contributing 25% and is estimated to increase to 50% of total production by 2025. As the largest importer of frozen fish in Africa, talking about Nigeria, with annual imports exceeding $702 million, the Nigeria wild capture shrimp industry generates only $57 million annually, amounting to 60% of total shrimp and prawn production. Even though, of course, as in many cases, Nigeria has the potential to do much more than that. So let's find out what's going on in that industry. Joining me from Victoria Island is Victoria Momo, analyst with Financial Derivatives Company. Hi, Victoria. Good afternoon. What's going on with seafood?
Hi, Annie. Good afternoon. Well, we are being specific about seafood here, speaking of shrimps and prawns. Quite a lot has been happening in Nigeria generally, and we've not been able to fully explore most of our potentials, like you rightly said. So shrimps and prawns have recorded declines in production. We've not been able to produce above our capacity in order to meet the domestic demand, as well as the international demand. Shrimps and prawns industry have really great potential in terms of generating revenue. And one of the major constraints of amassing that revenue right now is the decline in production here in Nigeria.
Then we do know that the issue of exchange rate is affecting almost all sectors, the oil and the non-oil sector. Does it have a hand in this?
Yes, exchange rate also play a role in terms of the availability of shrimps and prawns in Nigeria. That is because currently here in Nigeria, we actually operate a multiple exchange regime. That is, we have two windows, two major windows. That's the official window and then the parallel market. So because of these two windows that we have, we've seen more of arbitrage activity, more of smuggling activities by shrimp farmers, because there is a large premium between the official rate and the parallel market rate. So in order for most of these shrimp farmers to make profit, they actually sell these shrimps. Immediately they are caught to ships that are going outside the country. outside the country in order to, earn more dollars. And when this dollar comes in, they end up exchanging it at the parallel market where there is more profitability than for it to go through the official window. So this has a whole lot of impact in terms of revenue generation, in terms of production, because we would not be able to, properly capture the actual production of shrimps in the country. And as well as that, we would also have issues with, getting the specific amount of revenue that we get from shrimp export.
Well, as it is with other sectors, we have that exchange rate as a very big elephant in the room doing business in Nigeria. Now, let's see if we can learn some lessons from China. It's the highest producer of shrimp in the world with about 14,000 shrimp farms. Are there lessons that we can learn from China?
Yeah, thank you for that question. There are lessons, of course. I mean, it's not enough to possess certain natural resource. We need to explore them. We need to, maximize the benefits. Considering the fact that we have, a constant demand for shrimp in the world, global demand. So, of course, we need to explore it. We need to explore the benefit, the advantages that comes with shrimp production. But we are yet to do that because of low production level and as well as the issue of smuggling in the country. So, but countries, Asian countries specifically, like China and Thailand, have actually been able to identify the potential of shrimp industry, and they are able to, focus their research on that industry in terms of, innovation, in terms of improving the species and quality of shrimps. So, with all of that, they've been able to properly, remain competitive in the market and maintain that leading position in the market. I would not forget to mention the fact that they also had a challenge relating to disease that affected shrimps, but they were able to maneuver through that challenges by trying to culture new species of fish that had resistance to diseases. I mean, that's a really commendable thing to do. And these are things that Nigeria can actually do. More specifically, we need to improve our revenue generating commodity like shrimps and prawns in order to fully, explore the benefit that comes with growing demand.
Yeah, Victoria, thank you so much for that. I'm sure this information is at the fingertips of a lot of people in Nigeria. It's always the implementation of it. But thank you for sharing your thoughts with us this afternoon.
Yeah, you're welcome. Thank you.
We move over to Egypt now, where annual urban consumer inflation in December rose to 21.3% from 18.7% in November. That exceeded analysts' expectations. The inflation figure was the highest since December 2017 when it hit 21.9%. The price rises followed a currency devaluation in October and restrictions on imports. The central bank allowed the Egyptian pound to depreciate by about 14.5% in October and let its value continue to weaken slowly and incrementally in November and December. This goes somewhat towards absorbing a 25% devaluation in late October, but portends more inflation to come. Egypt's surging prices will add to pressure on the central bank's monetary policy committee to raise interest rates when it meets on the 2nd of next month. Ethiopian Airlines will increase frequencies to Chinese cities as of the 6th of February 2023. This will mark returning to the pre-COVID levels on the 1st of March, following the lifting of restrictions by the Chinese government. From next month, the airline will operate daily flights while increasing its weekly flights to Beijing. Ethiopian Airline will operate a total of 28 weekly passenger flights to China while operations are fully restored. And in Kenya, domestic sales of petroleum products increased by 11% in the financial year 2021/2022. That's the latest energy sector data, as a rebound on economic activities fueled up demand. The total domestic demand for imported refined products through the open tender system increased by 4.55% to 5.7 million cubic meters, and the Energy and Petroleum Statistics Report for the financial year ended June 30th, 2022. This was partially attributed to a 30.2% increase in the demand for jet fuel as a result of the opening up of the economy and resumption of air travel across the world. The report was confirmed by the Energy and Petroleum Regulatory Authority for the states. In Zimbabwe, the currency not looking too good as the currency plunged to a record in the unauthorized market after the central bank urged suppliers not to buy foreign exchange with payment they recently received from the government. The Zimbabwean dollar traded between 950 Zimbabwean dollar to 1,100 to $1 in the parallel market, and that's the lowest on record and significantly weaker than the official rate of 671 Zimbabwean dollar to $1. Businesses are allowed a 10% markup on the authorized price. The currency has been relatively stable since May after the government introduced gold coins that helped reduce arbitrage opportunities between the official and black market. The latest turmoil in the parallel market can be traced to the lack of foreign exchange sales by the central bank, which happened during the holidays. The weekly forex auction run by the central bank resumes on Tuesday after a 3-week break. That's it on the program this Tuesday afternoon. We'll do it again tomorrow, God's grace. I'm John Mekwa. Enjoy the rest of your day.